This podcast is produced by the Capabuild Foundation. The views and opinions expressed herein are those of the hosts and their guests and do not necessarily reflect those held by Capabuild.
Global tax rules are designed far from where their impacts are felt the most. My name is Atiya Waris. Join me and my co-presenters as we explore where global tax perspectives meet local realities in the Global South. Good morning and Assalamu alaikum, Farida. A pleasure and an honor to speak with you and to have you here on the podcast. Why don't you tell us a little bit about yourself?
My name is Nur Farida Liyana, and I'm now a lecturer at PKN STAN. It's university in Indonesia. It's a national university under the Ministry of Finance. And before I joined in PKN STAN, I was a tax official, and I worked for nearly 10 years at the DGT, Directorate General of Taxes in Indonesia. And now I became a lecturer.
That sounds like an interesting transition. I noticed that you've written on VAT and housing. So what is your position on VAT and housing in the Indonesian context?
In Indonesia now have incentive for people to have house in Indonesia, then we have a zero VAT in housing actually, because we know that house in Indonesia, it become higher price. So it is the incentive from the government to make the house affordable. So VAT 0%.
That's very interesting in a world where VAT is increasing. To do that is a fascinating conversation. I hope people will go and read your article after this. So today's conversation is about the international tax system, right? Of course, I know, congratulations, Indonesia has just joined the BRICS. I presume there's celebration on the streets, but many countries in the global south are working really hard to strengthen their tax system. So from your perspective, what does tax equity mean? And why does it matter for a country like Indonesia?
Okay, that's actually a really important question. And I think it is at its core, the tax equity is about fairness, as simple as that, but also quite powerful actually. In the context of countries in the global south, including Indonesia, tax equity means making sure that everyone contributes to the tax system in a way that reflects their ability to pay. So individuals, small businesses, and especially large corporations, including multinationals, are all paying their fair share. Why does this matter? Actually, because in many developing countries, there is often a perception that the tax burden isn't evenly distributed. For example, small taxpayer may feel they are carrying more of the tax burden, while larger or more sophisticated actors have more opportunities to avoid taxes, since maybe they can employ tax advisor to have tax planning. That perception exists, it can weaken trust in the system, and once trust goes down, compliance usually follows. On the other hand, when people see that the system is fair, that rules are applied consistently, and that tax revenue are actually used for public goods like infrastructure, education, or healthcare, it can really strengthen voluntary compliance. People are more willing to pay taxes when they believe the system is trust. But in Indonesia, actually, we are struggling in this tax compliance. We still have low level of tax ratio. And then because many people do not believe that their money that they pay for taxes will come back to them as the infrastructure built and etc. Because we have also struggling in corruption. That's why the people cannot trust the government itself. And for Indonesia specifically, tax equity is also closely linked to development. The country is working to expand its tax base and reduce inequality, and a fair tax system is key to achieve that. So maybe tax equity isn't just a technical concept, but it's about building trust, strengthening compliance, and ultimately supporting sustainable development.
So if we move view into the conversation that is occupying most of the tax world right now, which is how to tax corporations. What is Indonesia about, the global tax negotiations happening both at the OECD and the UN?
We are a capital importing. So actually the UN model will fit our tax system, because maybe it will benefit us more than the OECD model.
Yeah, I hear you on that. So for listeners who don't know what capital importing means, would you just define it for us, please?
Okay, capital importing is like we need investor in Indonesia because we don't have much capital in Indonesia. We have much more labor and also raw material, but for the money itself, we don't have much. So we need capital for importing into Indonesia. Then that's why maybe we use before the Pillar 2 implementation, then we use the tax incentive to attract the investment into Indonesia.
Thank you. And you brought up Pillar 2, which is this very fascinating negotiation taking place with the OECD. So what do you think Pillar 2 is about? And, is it a good thing for developing countries like Indonesia?
To maybe part of the global tax reform under the OECD and G20 aims to make sure that large multinational companies pay a minimum level of tax set at around 15%, no matter where they operate. So even if a company sees its profits to a low tax country, other countries can step in and apply a top-up tax to bring that rate up to the minimum.
So I guess the question is, how does Pillar 2 play out for a developing country? And is it a good thing to have a Pillar 2 process?
Actually, it depends. Pillar 2, as we know, is actually part of the global tax reform under the OECD and G20. Aims to make sure that large multinational companies pay a minimum level of tax set at around 15%, no matter where they operate. On one hand, Pillar 2 can be beneficial because it helps protect our tax base. If multinational companies can no longer easily shift profits to low tax jurisdiction, countries like Indonesia have a better chance of taxing income that is actually generated within our economy. Because as I mentioned before, that Indonesia has a lot of labor and raw material as well. And instead of maybe the multinational company build the company in a small country which have lower tax rate, because they will end up with the same amount of taxes at the end, maybe Indonesia will become a good choice to invest money to build a branch in Indonesia. But maybe on the other hand, there are real challenges. First, these rules are technically very complex. They require strong administrative capacity for the Pillar 2 companies to submit their global tax return. And then we actually need the sophisticated data system. And now we have quite brand new data system called Cortex. And actually it doesn't sound good lately. We try to make it better, but we are still struggling with it. We also need skilled tax officials to implement the Pillar 2 effectively. And maybe because in Pillar 2, we also have another party, like another country for this implementation. And the concern about who actually gets the taxing right is also the issue. In some cases, the additional tax might be collected by the country where the parent company is located. Often, parent company is located in a developed country rather than where the real economic activity is happen, like in Indonesia. But there is a policy trade-off. Many developing countries have historically used tax incentives to attract investment. With Pillar 2 in place, maybe those incentives may become less effective, which means countries need to rethink how they stay competitive. So maybe we need to have the good investment ecosystem for this, for the ease of doing business and etc. So in short, like Pillar 2 is a major step toward global tax fairness, but for developing countries, it also raises important question about the capacity and how the benefits are ultimately shared.
So how many people would you need at a revenue authority in Indonesia to roll out a Pillar 2? What kind of additional skills do officials have to have, and how long would it take, for example, the Indonesian Revenue Authority to be ready to roll out Pillar 2?
Actually, we already have like Ministry Finance regulation about this global minimum tax in 2024. April this year, actually, it will be implemented. As we do not have the DGT haven't have the regulation how implement this. So the company actually still wait and see to implement this global minimum tax in Indonesia actually. But from the regulation itself, it has until 18 months from the end of 2025. So maybe next year, the company that have to submit their form for the global minimum tax have to submit their tax return in terms of their global tax return. And actually, how much money that will the potential tax revenue that will come to us, I don't know yet about this because DGT itself, they didn't have quite open data for this Pillar 2, but because we have already commit to implement this, and we just have the regulatory framework through we call it PMK. PMK is like the regulation from Ministry of Finance, but detailed technical guidance is still limited, actually. That's why we haven't know for the Indonesian itself. Yeah, it's quite challenging to implement this Pillar 2.
So they will have to hire new staff, or they will have to train staff? Are there countries that you already think will be good to look at for training of staff to understand Pillar 2?
Yeah, of course. Actually, in Indonesia, we have international tax department, and for the multinational enterprises, we have a foreign investment tax office. Yeah, but I talked with my friend in that tax office last Friday, and they also do not have a strong knowledge about this Pillar 2 because once again there is no detailed technical guidance for Indonesia itself.
So that's clearly the point. That's going to be interesting, rolling that out in Indonesia over the next year, I'm sure. So one of the things you talked about is, Indonesia needs to attract money or capital. And so when we look at these Pillar 2 tax reforms that are happening, do you think this is going to help influence your ability to attract investment?
It's quite difficult question, actually, because it's not just the Pillar 2 itself that will attract the investment, because we need at a high level reforms, maybe Pillar 2, we can actually increase certainty in the global tax system. But at the same time, for countries like Indonesia, there are important trade-offs. Traditionally, many developing countries have used tax incentives, but for this case, since we will not use tax incentives itself to attract the investment to Indonesia, with this Pillar 2, maybe it will be good for the company, multinational company, to have a branch or give money to Indonesia to have investment in Indonesia. But we have not to relying mainly on tax incentive. And our country like Indonesia need to emphasize other factors like regulatory stability, the infrastructure itself, and then skilled labor. We have a lot of labor, but what about the skilled labor itself? And we have to help those, and also the ease of doing business. In that sense, Pillar 2 can actually encourage a healthier form of competition based less on tax rate and more on real economic fundamentals. Clarity is key. If the rules are complex and not well understood, even for the tax official itself, then if implementation is inconsistent, it can create uncertainty, which investors generally don't like. So for governments, one of the biggest challenges is not just adapting the rules, but communicating them clearly and implementing them in a predictable way. Because actually in Indonesia, we implement decentralization, then maybe the rules differ across the region. So it will also become a burden for the company, a multinational company, to set up the business in Indonesia because we have like illegal levies that will be a burden for them.
Wow. Just also for us to better understand Indonesia, right? How many multinational corporations are in Indonesia right now?
Okay, maybe more than 100 companies.
Okay, so would the test of success for Pillar 2 be an increase in the number of multinationals after it's rolled out, do you think? Or would it be an increase in collection of revenue?
Maybe in short term for Indonesia, increase the revenue.
So it's less about the capital investment, then it's really more about increasing the revenue base. That
Yep.
Pillar 2 will be a valuable input. I like what you said about clarity and certainty. And I think one of the things that international taxation has caused a challenge for is multinationals always talk about certainty, but there is nothing certain in our wonderful tax world. Joyful every morning to wake up because there'll be a new tax law somewhere.
Yep.
And, we did have this change last year with the United States withdrawing from so many bilateral tax agreements and tariff status. So does that have an impact on Indonesia in the rollout of Pillar 2? Or is the OECD's sort of influence maybe reducing a little bit? Is there less pressure to roll out Pillar 2 than before?
Okay, maybe just a little actually, but because OECD itself, because they are the developed country, then maybe for the Pillar 2 still have much more room. But I think the OECD still have more power for ruling this system of taxation itself.
So if we were to make the world a better place for taxation and have more equity and certainty, then what would be the thing you would like to see in global tax reform so that there is more equal participation of countries like Indonesia?
Yeah, actually we should have the equity for the over the world, but it's just not the money itself for the taxation is not just for the developed country that they have the money for the investment, but for the source country itself, like Indonesia, we also have the right to tax the multinational company or even the people from other country that build the business in Indonesia. So maybe the equity itself, the fairness from the taxation should have implemented all over the world.
Yeah. And I mean, I guess my last question, and then also, feel free to also share anything else that you think would be interesting. But my last question is international cooperation and assistance broadly. Do you find that seeing as where Pillar 2 is housed at the OECD, do you find there's a lot of cooperation and assistance coming from OECD member states? Or do you feel that it feels like you're almost alone in trying to roll it out? What's the support system for trying to implement Pillar 2?
Okay, actually, I haven't heard about this term because I work in a university and not in taxation department or Directorate General of Taxes in Ministry of Finance. But as far as I know, actually Indonesia have also cooperate with the OECD to implement this Pillar 2. But they just have the guidance itself and how to implement this Pillar 2. It's like we are alone and we have to make choice and then we have to done it ourselves to make the regulation, and then for the detailed technical guidance also, then it's still quite long to make the guidance because there is also some what we call different idea from the government itself.
Wow. Yeah, that's very interesting to hear that. Nur Farida, it's been an absolute pleasure. Really learned so much from you today. Is there anything else you want to share about the OECD tax system, Pillar 2, Indonesia, that I haven't sort of asked you about?
Yeah, actually, the idea itself is quite good for us in developing country, but maybe it's also like we have to make sure our business ecosystem in Indonesia to attract the investment to make more money, and then how to implement those OECD, the Pillar 2 itself, how to make the voluntary compliance from the multinational company itself, we have to dealing with, and we also have to make cooperation to the other jurisdiction because we don't know which one that have already put the top up tax and etc. So maybe the international cooperation should become strengthened.
Yeah, well, thank you very much, Nur Fatima. Been a pleasure having you here today.